I want to talk now about the infrastructure deal because it has largely been about rebuilding America's roads and bridges and railways and communication services. But it also has a provision to increase regulation on cryptocurrency. We're joined now by Lisa Ellis, partner at MoffettNathanson. So Lisa, let's just talk briefly about what these new regulations are that could be coming down the pike in this infrastructure bill.
Yeah, it's always a little bit, unclear initially because what happens in the final language is never always exactly how it starts out. But what it looks like it's kind of converging around is additional reporting requirements for the crypto brokerages. So this would be players like a Coinbase, a Gemini, a Kraken, even players like PayPal, Square, or Robinhood that enable their users to buy, sell, and hold cryptocurrencies, functioning as brokers, essentially, that they would have increased reporting requirements that require them to report to the IRS, the information about the transactions, particularly large transactions like greater than, $10,000, more information about when they occur and who's involved, et cetera.
Lisa, do you think that this may hasten a cryptocurrency ETF in the U.S. when we finally get these new provisions from Washington?
Well, it may help, I suppose. What's been holding up the crypto ETFs is that the SEC has very stringent requirements for things like liquidity, transparency, price stability when it comes to being willing to establish ETFs for certain asset classes. And so far, they've been wary of the crypto assets around whether or not they meet those requirements, too much. So certainly regulations in the US, particularly if other countries around the world sort of follow suit, that requires another level of transparency into crypto-related transactions would probably help allay some of the SEC's concerns around that. In the meantime, though, the IRS, of course, they're just trying to increase their tax revenues because many consumers either, deliberately or just are unaware that they are in fact supposed to pay capital gains taxes on crypto investing. And so, but the problem is that the IRS today doesn't really have any particularly good way of auditing that because they don't have visibility into the transactions. And so they're just trying to get this reporting level up so that they have a better ability to audit transactions and collect capital gains taxes.
So about that point, is the U.S. government looking to collect a lot more money from that reporting on some of these cryptocurrency transactions? What does this really mean for just the average person that might be out there watching that is on Robinhood or Coinbase or some of the other platforms buying and selling Bitcoin, Dogecoin, Ethereum, and some of the other cryptocurrencies?
Yeah, what it means for the individual investor in crypto is that they need to start thinking about crypto investing from a tax perspective the same way they would stock investing, where if you're doing stock investing, you're very well aware that short-term gains, you have to pay short-term capital gains taxes. If it's a long-term gain, you pay long-term capital. There's very well-established tax rules that individuals are accustomed to following when it comes to stock investing. Those same rules apply to crypto. It's just that it's been sort of the wild, wild west. And so consumers, should be aware that if they have not already started to make sure that they're getting the right reports from their broker, their crypto broker, and reporting it on their tax returns and whatnot, they should start doing that, or they'll, potentially be subject to an audit going forward.
Do you think, though, that this means the fact that the government is standing up and taking notice, does this in essence legitimize the cryptocurrency industry because even lawmakers are now conceding, this is here to stay?
Absolutely. I mean, as much as it may cause some short-term disruption, because, you can imagine some activity in the crypto investing world may drop off for a period of time when folks realize they have to pay their taxes. But over the long term, we view this as absolutely a positive. More crypto clarity around crypto regulation helps legitimize and mainstream crypto investing, opening up crypto investing to a much broader array of investors, mainstream investment vehicles, potentially, and over the longer term, absolutely. Just the fact that the government is even doing this, and like you said, lawmakers are well versed enough to be thinking of this and putting it in the infrastructure bill is certainly a very different place than we were in even 3 or 4 years ago in terms of the mainstreaming and legitimizing of crypto.
What about for companies, Lisa, as we've seen Tesla and others essentially start to purchase Bitcoin? How could this impact them?
Yeah, it's a same kind of idea. Yeah, players like a Tesla, players like all large corporations hold on their balance sheet a certain amount of cash, right? They usually have many billions of dollars in cash that they need for working capital purposes, and they're always investing it in different ways. And many of them are starting to use Bitcoin and other crypto assets as just another alternative asset class that they have some of their cash parked in. And it's the same, for them, it's kind of the same idea, meaning Tesla, Square, they're at the forefront of this. They're already comfortable. They're already doing it. But many other corporations are not. And so, better regulation, better oversight, better clarity, better security around understanding transactions and having visibility into exactly who's on both sides of the transaction. We'll probably then see a much wider array of corporations start to include crypto assets as one of the investment asset classes they use, just like they may use all different forms, commercial paper, right? They may put a portion of their cash in a whole diversified set of investments.
All right, we'll leave that there. Lisa Ellis, partner at MoffettNathanson, thank you so much for joining us today.